Thank you very much for these kind words. Thank you very much for having me. I hope we'll have a very interesting discussion. But before I start, I would like to start with some like the panel structure. We first will have time to discuss among us, and then 15 minutes will be dedicated to Q&A. So I hope you'll have plenty of questions to fill those 15 minutes. So thank you very much for being here. First of all, I would like to introduce you to my far left. It's Candice Kelly, Chief Legal Officer from the Stellar Development Foundation. Then we have, of course, Brent Nyman, Counselor to the Secretary from the US Treasury. And next to me sits Evelyn Whitlock, Program Director for the Digital Euro Project. And remotely, here on the screen, we do have Yong Song Shin, Economic Advisor and Head of Research from the Bank of International Settlement. So thank you very much for being here. Perhaps first of all, it's work in progress, I guess, the topic we want to talk about, digital currencies. Perhaps I'd like to start off with you, Brent, because there was a recent study just released from the US Treasury some 2 weeks ago, I guess. Where do we stand in terms of the CBDC?
Yes, so stepping back from CBDC a little more broadly, back in March, President Biden put out an executive order that requested a number of reports to lay out a comprehensive and coordinated policy governing digital assets. The goal being to foster responsible innovation while also protecting consumers, while protecting businesses, while paying attention to concerns about illicit finance, potential risks to financial stability, economic growth, etc. So this collection of reports, which involved work by many agencies, including Treasury, aimed to deliver against that request. And 3 of our reports were issued 2-3 weeks ago at this point. And the first one is probably the most close to your question relating to CBDCs, for example. It's called the Future of Money and Payments Report. And this report really talks about ways in which we can build on kind of our global position and leadership to improve the competition, the efficiency, and the inclusivity in global payments systems. And there's really 3 key recommendations that came out of that report. There's 4 for those that read it closely, but I'm going to merge 2. So the first is that we should have a working group that will be Treasury-led, that will discuss and further the study of the technical pieces that would be required and the policy pieces required to go ahead and move forward with a CBDC were the U.S. in the future to deem it in the national interest. So this is really an option value sort of thinking that it takes time, of course, to put together the infrastructure to have a successful CBDC, and so we want to make sure to move ahead and be in a position so that we could quickly do so if we do deem it in the national interest.
Perhaps we move on to the Eurozone, because we've just seen that on the map. We are 1 step ahead of the US. It's a rare thing, right? But where do we stand, and why is the ECB considering, or has been considering, to launch a digital euro?
Yeah, well, just let me be clear. We have not decided to launch a digital euro. So the ECB decided in 2021, in July, to start an investigation phase, which started on Q3 2021, and which will last for 2 years. So we will finalize this investigation phase at the end of, say, Q3 2023. And then we need to go back with an advice whether or not to go to the implementation phase. And if the advice would be to go to the implementation phase, of course, we need to present how this would look like, so how the digital euro could look like, and what would be the implementation plan. And then we see as a separate step the decision to really issue the digital euro. So that would be then only the step after that. So, but in order to come to the advice, but also to work on the design, we are indeed quite concretely discussing how this digital euro could look like.
Wang Song, I would like to cross over to you. I guess you're in Basel, right?
Yes, that's correct, Aneta.
Okay.
Yes.
I've just read that there was a landmark international CBDC test, which was deemed a success by your organization. Perhaps you can talk a little bit about it and also the key parameters and why has that been a success?
Yes, thank you, Annette. Let me say that I wish I could have been there with you. Let me also thank Josh and the Geoeconomic Center at the Atlantic Council for their great work. I think the CBDC tracker really is a very useful tool, for everyone. So, Annette, if I can just take a step back, just as Brent did, just give you the broader context of the BIS's work in this area. We are conducting work in a number of different areas. First of all, we're looking at the broader design principles, the economics, if you like. Then we have the work which is very much channeled through the Committee on Payments and Market Infrastructures, the CPMI, which is the standard-setting body for payments across the world. There we're conducting the ongoing work, but also very importantly, the G20 initiative, the G20 roadmap on cross-border payments. And there are 19 building blocks. The BIS is leading 11 of those 19. And of course, CBDCs play a very important role, and it's part of that initiative. And not least, we have the work, and I'll talk about the project that you just mentioned, that's going through our innovation hub, the BIS Innovation Hub. And there, what we've done is to collaborate with our partner central banks. That's the broader membership, first of all. We have 63 central bank members. But in particular, we have the number of centers. We now have 7 centers plus 1 strategic partnership with the Federal Reserve, where we're conducting really hands-on experimentation, hands-on construction of a number of different designs. So the one that you mentioned is a project called mBridge. It's short for Multi-CBDC Bridge. It's run from our Innovation Hub Center in Hong Kong. And it's a wholesale CBDC design. So wholesale meaning that this is primarily for commercial banks and other financial intermediaries who have access to CBDCs. It is a decentralized system in the sense that the architecture relies on distributed ledger technology. And this is for governance reasons as well as for technical reasons. For the technical capability, the DLT platforms tend to give you a lot more flexibility to implement, contingent, contracts, smart contracts, if you like, but also for governance, because there's more than one currency involved, and therefore more than one central bank. And so a decentralized system works better for governance reasons as well. This is a project that has been running for a couple of years now, but we came out with some preliminary results of some test transactions. And I think it's, as you saw in the report, what we saw was that the transactions using the DLT platform went through without a hitch. It very much echoes the earlier projects that we tested here in Switzerland with Project Helvetia, which was the project that we had with the Swiss National Bank. And also a cross-border platform between the Swiss National Bank, the Banque de France, and the BIS called Project Jura. And again, that was a decentralized system using central bank money, but also using permissioned DLT.
Well, that's interesting, but perhaps we move on to the private sector as well, because we clearly have been hearing the side from the central banks and the US Treasury. Candice, you're coming from the private sector, from the Stellar Development Foundation. Perhaps you, A, can explain what you're doing, and B, how the stablecoins and cryptocurrencies are actually differentiating from the digital central bank currency.
Sure. Thank you. And I do also want to make sure that I thank Josh and the Atlantic Council for inviting me. And I mean, I don't know if anyone's been keeping a tally of how many times the CBDC tracker has been mentioned, but that was certainly the way I learned of the Atlantic Council when I entered this space. So thank you for all your work on that. So the Stellar Development Foundation, I'm assuming that many of you are not familiar with our work. We are located in San Francisco, US-based company. We support the growth and development of the Stellar Network, which is distributed ledger technology. And the mission of the foundation is to create equitable access to the global financial system. And so it's always very encouraging. And when we see things like the Biden EO and others and folks talking about the need for a CBDC or any kind of use of the blockchain and distributed ledger technology, that financial inclusion is such an important facet of the analysis, no matter what. So at the risk of going on and on, I'll give a sort of short. So in supporting this technology, the technology, unlike a lot of the distributed ledger technologies that you are more familiar with probably, is not proof of work and it's not proof of stake. It is the Stellar Consensus Protocol, and I will not get into the details of it, but just to say that it's a very different type of protocol. One advantage of it is that it does not use very much energy, the equivalent of about 33 U.S. homes over the course of a year is about the amount of energy that it has used historically since 2014 when it was launched. And the other there are no smart contracts, which I think introduced some amount of risk from a security perspective. I was a national security prosecutor for many years prior to this life, and it was very much designed with cross-border payments and asset issuance in mind. And so, in order to issue an asset, whether it's a stable coin, and when I say stable coin, I'm talking about not algorithmic, like stable coins that are backed by fiat currency that's in a bank that hopefully will be regulated in the United States and elsewhere soon, or a CBDC that they are assets that get issued. It's a few lines of code. It doesn't involve a smart contract that may introduce some extra vulnerabilities. And importantly, for either stablecoin or CBDC, the issuer, there's a whole laundry list of controls that the issuer can choose to have or not have for their assets. So many stablecoin issuers don't use these flags and these technological tools, but there are tools, for example, that called authorization required, which means that no one can hold that asset until they have cleared whatever compliance you want them to have to clear. So this has also been used in issuing securities, like given how complicated the compliance obligations are there. Clawback capability is another option. And so it does give, while it's an open and public distributed ledger, there is this asset control by the issuer that kind of, to us, is the best of both worlds, of being able to have this open public ledger, which fosters creativity, innovation, and cross-border, if there are multiple different types of assets that are going to be issued and exchanged on it, but also giving the issuer a significant amount of control and choice in what it is exactly that they want to control.
Yeah, let me step back, perhaps also to shed some more light on why we're actually having that discussion. So what are digital currencies, or what is the benefit from having one, and why are we discussing that? Should it facilitate more trade? We had that early on in the discussion, I think, with President Lagarde. She was also touching upon it. Is there hope to have more liquidity in the financial system across the world, Brent?
Yeah, so, I mean, in their current state, digital assets are primarily used as part of the digital asset trading ecosystem. But we think there's, certainly the prospect that real benefits are brought to consumers and businesses. Let me start by emphasizing one possibility, which is the improvement of cross-border payments. It's actually one of the recommendations in that Future of Money report that I didn't get to mention yet. And to give an example of where this could produce some real gains for the world would be, for instance, to take remittances as an example. There's more than $600 billion of remittance flows per year. In a lot of low and emerging market countries, this can be, account for several percentage points of their GDP, and yet it's very slow under current technologies. Charges can be 6-7% on average. Yes. And so there's prospects to dramatically improve, for instance, cross-border payments. That's at the retail, but also at the wholesale level. There's any number of other benefits. Some of the smart contracts that Hyun, for instance, or those elements mentioned earlier could be quite beneficial, and you can imagine innovation on top of a safe money CBDC-like platform. But what the report really emphasizes, or all the reports, is that these benefits must be treated appropriately, weighed against the risks. We need to build up a regulatory perimeter and framework and structure such that we do, protect consumers' privacy, such that we do protect and guard against furtherance of problems with respect to AML, CFT, and I don't want to put too little time on those very serious and important concerns, which is why it's a very deliberate effort laid out in this executive orders reports, getting the benefits and the costs.
Yeah, we'll touch upon the risk a little later and also the privacy issue. But let me ask you as well, Evelyn, because clearly I think President Lagarde early on in her speech or in the Q&A session, she was saying that, of course, there's loads of room for an increased role for the euro internationally. Is there also hopes attached to the digital euro project that the euro actually could be much more influential in the world in a digital version?
Well, I think the key objectives that we have with the retail CBDC, so the digital euro in our sense, is much more first of all related to the Eurozone itself. So one reason why we consider the digital euro is that we see that people are moving into the digital age, so we pay more and more digitally, even in environments where you can only pay digitally, or in a physical environment, but where we prefer to pay digitally. And we find it important that also in a digital age, people have access to central bank money, so that there is a monetary anchor like there is now with cash, but also if we move to a digital age, that there is also in that environment the access of the end users to central bank money. So that is one, because we believe that this availability gives trust to the full system, that you have the trust that you can convert your, say, commercial bank money into central bank money is essential. And the second objective that we have is related to a strategic autonomy, so that we can make sure that within Europe we have a pan-European retail scheme, and currently, as you know, this is dominated by non-European players. So this strategic autonomy, together with economic efficiency, is a second key objective. And then, of course, cross-border usage is investigated. We also participate actively in the BIS, but the key objectives are primarily first focused on the Eurozone.
Perhaps, Young-Song, you're in the best position to perhaps shortly explain to us what the key differences are between a central bank digital currency and what we know as cryptocurrencies. Because clearly I think there's still a lot of mixing up when we talk about it.
Yes, Annette. Let me perhaps also give you a sense of the variety of different ways of approaching CBDCs as well. I would say there are broadly, there are in particular two design choices that are really very important, two forks in the road, if you like. The first choice is whether you're going to go for a centralized ledger or a decentralized system of some kind. And the second fork in the road would be whether you're going to be using real names and using some identification of the individual to be a member of the payment system, or you're going to allow the use of private keys, essentially to allow the users to mask their identities, behind the address. cryptocurrencies, crypto is a design where you're taking a decentralized route. And so what you're doing is you're taking finality and settlement of payments as a matter of consensus within decentralized nodes in the system. And secondly, you're actually allowing everything to be posted publicly, but you're preserving privacy by allowing people to hide behind their public key, so you can obscure who you really are. The way that we think of CBDCs, on the other hand, is very much that whether you take a centralized design, which is I think the way that most retail CBDC projects are envisaged, or whether you take a more decentralized design, and those are much more those are much more useful for these wholesale applications. Whichever route you take in the CBDC world, you would actually use real names. So you would actually have participants entering the system and using your real names, but then privacy is guaranteed through cryptographic techniques that will allow the particular transaction to only be visible to the minimum number of people that absolutely need to know it. In particular, the sender, the receiver, and the banks that are involved. So I think that's the big picture, I would say, Aneta.
Candice, what's your view? Because you're clearly an expert on stablecoins. Do you think there will be competition in the end between stablecoins and central bank digital currencies, or can they complement each other?
I think they can absolutely complement each other. I think that stablecoins are already widely used, maybe a little bit extreme, but in my world, they're widely used. And, like when Brent just said, there are cross-border benefits that could come from CBDCs. They're already happening with stablecoins. So we've done pilots to compare cross-border remittances, and, the World Bank statistics I've read are, in an average of 6% cost for that. And the pilots that we've run, it's about 1.6%. And so fast, and they're there in 3 to 5 seconds. So I think that there will be optionality if there are CBDCs and there are stablecoins. And we can see already, even if you just look in the realm of the different types of stablecoins. So I mentioned that, we focus on stablecoins that are fully backed and that are very transparent in terms of what their backing is. There are a lot of other options out there, and there are people who are choosing to use them. And it is not certainly for the Stellar Development Foundation to make those choices. Certainly we think that consumer protection and transparency is very important, but there may be particular use cases where it's better to have a central bank where you have your name attached, and you want to make sure that there's that level of transparency. There may be other use cases where it's okay to have to take 2 steps to get to who it is. Eventually, somebody is behind that address. And so I think that there's plenty of room for both CBDCs and for stablecoins, and that having both will just create more competition, more innovation, and more choice for consumers.
Brent, you're nodding. Would you like to add on?
No, I should clarify. I might have misspoken when I talked about the potential benefits for improving cross-border payments.
Yes.
I meant from digital assets broadly, including stablecoins and beyond. Maybe I misspoke, but wasn't focused specifically on CBDC there.
But let me bring you back to the point of risks, because clearly for many people out there, cryptocurrency have shown that they're very risky assets this year. Almost everything was a risky asset this year, but still cryptocurrencies especially have been sold quite substantially. Perhaps we go back to the general risk attached for digital currencies. Perhaps you could tell us more about this.
Well, sure. You mentioned the collapse in market value of some stable coins in spring, for example. Yeah. So that clearly brings up potential investor protection issues. There's very obviously AML, CFT issues that we need to be concerned about. One can think of financial stability issues arising, for example, from the way in which, let's say, a stablecoin, manages or holds or doesn't hold reserve assets backing its value. You can imagine, again, the concerns around privacy. A CBDC, for example, would give a central bank a very large amount of novel types of data, potentially, about its users, and we want to be very careful in how we think about that. There are a lot of risks and issues of this kind that we want to be thoughtful about and very careful about so that we minimize the concerns on those risks while maximizing the benefits that we all get from digital assets.
Yeah, and what's the latest in this debate? Because clearly there must be a design, or at least you must be working on a design to prevent or to reduce those risks.
When you say debate, I mean, this is, for example, one of the elements of our international engagements. We work, for instance, at the FSB, where there's working groups like the RIS, which stands for Regulation in Stablecoin, for example, developing principles that will hopefully guide developments of regulation in stablecoin. We also domestically have, in the coming weeks, there will be a report from the Financial Stability Oversight Council, our FSOC, which will evaluate whether and how digital assets might present financial stability risks and give an overview of our current regulatory framework, highlighting gaps. It's work like this and collaborations like this with an eye toward those risks that hopefully will help us develop a more robust kind of regulatory approach and policy framework so that we can minimize the likelihood of any of these problems.
I mean, privacy concerns have been always key when we talk about central-backed digital currencies, especially when it comes to more or less autocratic nations. So it's probably privacy concerns are much more high on the agenda, but also for the digital euro, you're thinking about this issue, right, Evelyn?
Yes, because privacy has been given back in the consultation that we did, and the European Commission did very recently also consultation, and the concern about privacy is high. I think there are two types of concerns on that one. So one would be, in general, the concern about privacy for digital payments, because if you have a banknote and you pay somebody, then nobody needs to know. But if it's digital, it's always registered. So that is true for all retail payments solutions. That's also currently in the commercial banking space. So we interact a lot with market parties, for example, with consumer organizations. So we have GDPR, of course, in Europe, which is important, but this is a general concern, but which is then also a concern, of course, for the digital euro. The other concern, and that's specific for CBDC, is that the central bank plays a role in the processing of the CBDC. So we have been exploring this extensively because with privacy there is the balance, and that's also asked by the market, both the consumers and the retailers, is that, of course, everybody wants to fight fraud and illegal activities. So there is this balance that we need to find between privacy and AML CFT concerns. So for that reason, we have studies, and we have talked about this before. So we believe that in the digital euro, we foresee that the distribution will go via supervised intermediaries. So we will not have direct contacts with the end user, so it will go via supervised intermediaries. And we believe that they will know their clients like they know for current payment methods. They will do KYC, AML, CFT. And then we are designing the system in a way, and it was alluded to already earlier, that with privacy-enhancing techniques and pseudonyms, we could make the digital euro work without the euro system knowing private data. We need to finalize this whole design, but we think we can go quite far with that and hope with that we can address the privacy concerns. Last thing to say about this is that in the end it will be the regulator, of course, to take certain steps on privacy. And if you allow me one more comment, because there is also sort of the right of privacy. So that's why we consider two types of digital euros, one being an online one, a third-party validated, and then also an offline one, which would be much closer to cash. So then, of course, people will know, or intermediaries will know, that you have topped up whatever wallet or card or whatever we will design. But if you do transactions in between, then, like with a banknote, this is not registered. So with that, we hope to be able to cater for the different needs of privacy. Because also from focus group, we got back that for users, there's a trade-off between privacy and the ease of use.
Yes.
So privacy is a very complex matter, but we think that we could cater for this in a way.
Yeah, Kenneth, do you think privacy is a key reason why there is room for stablecoins and cryptos to stay in the markets, even though we are going to get digital central bank currencies at one point in time?
I do. I think that there are trade-offs, and anything issued by the central bank is probably going to have weigh more heavily on privacy and making sure, particularly in the EU, where the GDPR and different sensibilities. I know President Lagarde talked about this is only going to happen if people want it, and it's about what people are willing to, the trade-offs that they're willing to make. I think the other aspect that's not necessarily exactly privacy, but the fact that it's a central bank, I think the reason that there are a lot of people who are unbanked and underbanked is some of it is de-risking. And there are solutions with a stablecoin. For example, we have a partnership with MoneyGram, which is a money remittance business that's in 290 countries, where an individual can go in and get KYC'd and give them cash and receive stable coins, digital dollars in their wallet, and then they can transact, and they're in the digital world. They can send a remittance if they choose to. This is a way to really further financial inclusion and particularly reaching those. There may be a solution with a central bank digital currency that lowers that barrier to folks who don't. The banks aren't willing to take them on as a customer because it's just not financially a good idea for them. But it will certainly also reach folks who still just don't trust the banks, which I think a lot of us in this room probably don't experience that as much in the countries that we live in. But when you look across the globe, that is a very significant issue. And so I don't know as a CBDC will necessarily address that problem.
Yeah. Wang Song, let me ask you one question about, because the panel is called Coordination and Compromise. So how important is it in your view that we have a coordinated approach to the design of central bank-backed currencies, digital currencies?
I think in the case of retail use, which has primarily a domestic focus, I think there is some scope, certainly for the specific elements of the design to take account of local features. When it comes to cross-border use, and in particular wholesale use, where you have banks and other financial intermediaries that are going to be very much intermediating across borders, then clearly there will need to be, I think, the broad outlines of an agreement on what that kind of system would look like. I think we're at a very early stage, I would say. The examples that I mentioned earlier, still very much in the exploratory stage. But I think on the whole, if there are some preliminary conclusions for retail use, so for daily use by households and non-financial companies, some combination of an open architecture where you have so-called application programming interfaces, APIs that allow competition and financial inclusion, that will actually lower costs and actually expand financial services to a large number of people. And here there is a great deal of similarity, I would say, between various retail CBDC designs that have been mooted and traditional retail fast payment systems. And in some ways, it's the developing economies that have really led the way. So UPI in India, PIX in Brazil, these have been very much listed as examples of success cases. And the US is going to launch FedNow. And we learned recently that it's going to be next year. And so the US is also on that path as well. And the Euro area and the UK and many other countries in the EU already have these retail fast payment systems. So that's one thing. But I think on the wholesale design, I would say that the consensus now is that for wholesale use, some type of permission DLT where you're using real names rather than crypto, and where you have the token being a central bank liability, so that it is backed by the central bank. If you like, it's the unit of account that underlies all the other promises in the economy. And I think what we have seen with the crypto turmoil this year is just to underline the importance of that. And in a way, stablecoins are if you like, a gesture from the crypto community towards towards central bank money. It is, after all, an attempt to piggyback on the credibility of central bank money. And I think what this all suggests is that as we go forward, the cross-border initiatives, we will learn more lessons. And I think in a few years' time, I think we will have accumulated enough experience with this to have a good idea of the proposed way forward.
Yeah. One other aspect is about international standards. I think the key question is who's going to set the standards. Is it the Europeans? Is it US? Is it a coordinated approach? What's happening right now, Brent?
I think the way I think of it is, we care a lot about maintaining very high standards in a lot of these interests in terms of the governance and regulatory structures. And we care a lot about level playing fields, which we think will also allow for the greatest cross-border innovation, where improvements and innovations made in one country can build on others and come back and forth. And so I think it's important to collaborate and to coordinate at that level. And that's why a lot of our engagements, as I mentioned, are in the context of the G7, the G20. For example, the G20 has a roadmap on cross-border payments. This isn't about CBDCs per se, but and continuing to be fully engaged through those sorts of groups, as well as gatherings like this. Bilateral communication will make sure that we can hopefully maximize interoperability when we want it, when we need it, while avoiding any risks that otherwise we have to be concerned with.
What's your view on international standard setting? Is there a lot of cooperation going on, or?
Well, I think yes, but we also need to be aware that everybody is in what you saw. Also, the majority is still also designing how they think it should look like. So what we see is that we do this in parallel, and a lot of the work for ECB does via the BIS on the cross-country international reach. But it's a sort of a moving target, because everybody also still defining, and some are in very early stages and some are a little bit further on. But we find it important to work on, and for our side would be mainly on the practical side. Okay, how could it look like? How could it work? What are the things that we need to think about so that we can take this along in our design as good as possible?
Perhaps we're approaching at least the end of our a discussion, and then we're going to open up for Q&A. Perhaps a question as well. I think it's perhaps a bit easy, but will that be the end of cash in your view? We have been touching upon that question as well earlier on, because when we talk about the digitalization of many processes and the digital euro, it could also mean that perhaps there won't be any cash anymore in the future.
Well, it's not up to the ECB, of course, if nobody wants to use it anymore. But that is not our view. So we think the digital euro will be an additional way to pay. So it will be next to cash. It will not replace cash. Also, I want to have said, it's also not meant to replace current private solutions that are in the market. So it's an additional way to pay that we will position. But the ECB is very committed to cash.
The US dollar, will it vanish?
Will the US dollar vanish?
Like as a banknote.
Got it. I don't have, I'm sure the Federal Reserve, for example, and our approach, I think, thinks very similarly to how the ECB's approach was just described with respect to that.
Yeah, I would also be curious about the timeline, because of course we're still talking about the project, but when do you think a digital dollar will actually be implemented or be in place?
Yeah, so I don't have a number, and like I said, we haven't made a decision. The Federal Reserve has not made a decision. The decision or the recommendation from the executive order is to push ahead such that we're in a position to make that kind of a decision. But because there's obviously quite some time between, it's not going to be immediate, there are some things that can be done in the shorter run that the executive order also suggests. For instance, focus on instantaneous payment methods, real-time settlement methods. Hyun mentioned FedNow, which will be in use in 2023, for example, can improve on some of the frictions that are discussed as a possible benefit of the introduction of some of these digital assets. So there are things in the shorter run also that we can be working toward while we also develop technical standards and push ahead in a policy framework that might accommodate a CBDC.
Young-Sung, perhaps because you're looking at the whole world, what do you think, which region or perhaps which country is actually moving the fastest when it comes to the introduction of a real digital central bank currency?
Yes, Annette, I would just underline what Brent said on the need for, if you like, keeping pace with public consultation. I think the technologist's role and the role of institutions like the BIS is to, if you like, lay out the possibilities and lay out some of the principles. But the debate, I think, has to happen within each jurisdiction. This is a very, very important debate because it goes to the heart of our economic life. It's the unit of account in the economy. And everything really depends on that unit of account. And whether it be in the form of paper cash or whether it be in the form of digital payments through your bank, this is something that has many, many different facets in terms of public policy, and so our approach has been very much to if you like, lay out some of the reasoned arguments, but it is up to each jurisdiction to actually have that public consultation, have that public debate. And when they're comfortable, they will actually lay it out, and we'll take one road or another. And so, I would say that even in the most advanced jurisdictions, in terms of advanced in the sense that they're further along the route towards adoption of a CBDC or some version of a digital currency that actually is underpinned by the central bank. And here I would also include digital commercial bank deposits as well, because I think that's also a very important part of the mix. So even in those most advanced jurisdictions, I think we're still years away. But I think what we're doing actually is taking note of the lessons as we go along. there are some economies like you mentioned Nigeria, who has already issued a CBDC, the e-naira. Among the larger economies, ECNY in China is probably the most advanced in terms of there being actual trials in medium-sized cities. But even there, there's a debate. There's a question of whether whether ECNY will be able to, as it were, reclaim the ground from the two big tech, payment firms, which are extremely, omnipresent, if you like. They are, they are really the kind of dominant platforms. And so the question of whether it will be, used too much or whether it will be used too little, I think the jury is still out of that.
Candice, perhaps because you're like an expert on more or less digital assets as such, how do you think they will actually change our lives? Because you seem to have adopted the use of stablecoins for yourself, but I think the majority of our audience probably has not yet. Perhaps you give us your view of how this is going to affect our lives.
Yeah. Well, I think that really all of this is, and including stablecoins and CBDCs, it's really part of the evolution towards Web3. And it's part of the evolution of having more ownership and control over your value and over your personal information. And so I think if designed properly, whether it's stablecoins and the services that offer stablecoins, or a CBDC that's properly designed with respect to privacy and consumer protection, I really think that it changes the dependence that every individual has on whether it's a central bank or big tech in terms of our own ownership of our personal information and our value.
Well, thank you so much. So, questions from the audience. Okay, there are plenty. Okay. Perhaps we just start here with the gentleman on the...
My name is Michael Frenkel, and I'm still wondering a little bit about the demand side. So let's take a German bank customer who has a checkable account, deposit insurance 100,000. I understand the cross-border transaction that could be facilitated if you want to become cheaper than, let's say, the wise things and that are already offered by the private sector. So, and two, let's say, demand components of digital currencies, the cryptocurrencies, are out. One is illegal transactions, and the other is speculation. So that's out. So the question is, how much difference is there between a checkable account that I can also already use on my smartphone, and that's digital, and a digital euro? So where is the demand coming from there? So maybe you can explain this in simple terms, what the advantage is over my bank account. If you, as a central bank, don't want to play banks, so to speak, a private bank that may be offering accounts at a lower price than the commercial banks.
Thank you very much. Evelyn?
So I think it's important to understand that the main drivers for the ECB to consider it are, I would say, policy objectives. So, for example, the discussion that we had on the monetary anchor and to have always access to central bank money, this is not something that an average person thinks of all the day, that it's there. But history has shown, and it's also that when you have only privately issued monies, that can lead to instability. So this is a risk, I would say, of more of society. Do we want to have an environment, and then we take the extreme form that everything has moved digitally? We're not there. We're not there. But suppose that this is going to happen, or at least the majority of our transactions, and we want to do are there. Would we be okay? This is fully privately owned, governed, and so on. Because we also know payments is like electricity, if it doesn't work, economy is really injured. I would say. So if there cannot be down payments, that is really a problem. So that's also why the strategic autonomy is really important. So some of these more policy objectives, one of the challenges we will have if we will move into an implementation phase is how can we translate this so that everybody, that also not like us are so deep in the matter, understand this importance. And secondly, we need to design the digital euro in a way that it's really felt as an easy-to-use product with a high level of privacy, and that in certain use cases, because as we said, we don't need to dominate the market, we just want to be there as well, provide added value to the customer. So. So it's twofold. So one is more the policy objective, and how can we make this understandable for the average general public, I would say. And secondly, how can we design it in a way that it really adds value?
Here, I think at the front. Thank you.
Thank you very much to the panel. Carola Westermeier from Frankfurt University, and I would like to push this panel a little bit more into let's call it the politics of CBDC, and maybe more concretely the security politics of CBDC. So I'm very aware this is all at the very early stages, right? But very concretely, I would like to understand where setups like multi-CBDC and international cooperation, where this would lead to the sanctions regimes that we have right now. So because as far as I understand, a lot of what we have in terms of US sanctions is implemented through correspondent banking, through the central role of US banks in the dominant financial system. So I would like to understand how this would work if we have a world that interacts via multi-CBDCs hubs, and where is the place of US players in that world. And so that goes more to the US side in a way, I guess. And then I would like to also find out more about the European Central Bank stance on that. I mean, you mentioned strategic autonomy, and that is, in my understanding, rather a security consideration that the European Union has. And maybe there's some sort of irony here that being here at the Atlantic Council and the Atlantic Brücke, that the digital euro is also directed, not against, but competes foremost with US companies in European payments. So, I mean, where does it also bring us to with transatlantic relations, and I mean, what kind of security implications are being considered here? Is this also a sanctions mechanism, and that, in the case that we have a new US administration that could target maybe European payments as well. So these kinds of, I mean, maybe I'm pushing a bit too much and bringing towards scenarios here, but I would like to know where the security politics are of CBDCs.
Okay, thank you. Would you like to answer?
Sure. I'll zoom out a little bit and instead think about kind of the broader role and use of the dollar. We saw in the previous session a slide on the dollar's use as a reserve currency, but I think of the global role of the dollar as a much broader concept entailing, the share of dollar use to settle international trade in goods, in assets, how are bonds denominated, bank accounts, bank lending, not just reserves. And I think that, if you think about some elements, maybe are affected by the advent of digital assets writ large. Others, it's less clear why they would. So far in this conference, you've heard sort of depth and stability of U.S. financial markets, liquidity, convertibility, rule of law, all cited as reasons why the U.S. dollar has been the global currency for so long. And the reason I think that's been repeated so frequently is, I think that is, in fact, the most likely determinant, the most likely explanation of why the U.S. is disproportionately used. And then there are, of course, reinforcing feedback effects. When you use the dollar to invoice trade, there's an incentive to use the dollar to invoice finance, et cetera. So I concur with what I think was sort of the consensus so far, that at least in the short and maybe medium run, the dollar's role is likely to stay strong. That said, whether you're thinking, about sanctions or sanctions evasions, I should say, or illicit activity more generally, this is something important that we need to coordinate and be vigilant on. And some of my earlier remarks talking about how we're doing that in multilateral bodies are precisely to try to minimize the risks for AML, CFT, et cetera, that some of these digital asset technologies could plausibly bring.
Thank you. More questions? There's one at the back there, and then we're coming to you, and then we're running out of time, and then you. Okay, 3. But short, please, okay?
Yes, I'll make this very short. I'm David Metzner from Washington, D.C. We heard the Counselor, the Secretary, use the word AML, and it seems that when we're talking digital assets, we're kind of stuck all too often in the AML discussion. We have to regulate the roulette or the game, the speculation. And I'd like to turn it around. I think what's missing is, use cases and what digital assets will do for our GDP. I mean, we talked about cross-border payments, but that's just a sliver of it. I mean, are we really on the horizon of a major catalyst for future GDP growth, or is this a sideshow? Thank you.
Who would like to take that question?
I'll give way quickly to others, but just to note that the report, we didn't cover some of the benefits that are covered. So, decentralized finance and smart contracting technologies have been proposed as potentially used, in repo and insurance and major parts of the financial system. There's in the same way that Federal Reserve banknotes, gave rise to a lot of innovation that accounted for genuine productivity growth, real increases in GDP and financial sector value added, there's at least the prospect that some innovation built on top of a stable, well-regulated, safe money platform, could come about. And policymakers are rarely the ones that can best identify, what exactly that innovation might look like. The reason responsible innovation shows up so much in the executive orders, I think it is our job to lay the conditions such that our economy is protected, but the conditions are such that innovation, in fact, can take place. So I agree with your point, that there are some real plausible gains, even above and beyond cross-border payments, which I also do think is quite important.
Thank you, Brent. Would anybody else?
No, I think I can only agree to what you said. So for us also, we see the CBDC also opening up opportunities for innovation for the market, just to add that. But I think we're very much on the same line there.
The lady here in the front, 3rd row, I think 4th row, yeah.
Hi, my name is Anna Freitag. I'm here from Frankfurt. I have a question for you regarding the ECB, the digital euro. How many people are actually working on it right now? And because, it's a very big initiative. We had here statistics, how advanced we are. I'd actually like to know how many people are involved right now in this project, whether any sort of prototype has been built. And then, assuming in Q3 2023, you will decide to proceed with it, people of Europe will want this project, what is kind of timeline for the rollout of it? And who will actually build it?
Thank you.
Yeah, well, that's a lot of questions. So we have a core team with people from the ECB. We have also teams added, or people in the team added from the national central banks from all around Europe. But those are the people that work on it on a day-to-day basis. And then we work closely together with a lot of stakeholders. So, as I said before, so we work together with the ERPB, where we share our analysis and we get their feedback. We also have a cooperation with the European Commission to make sure that we share our analysis. so that they can do their work and we can do our work. It's quite, I think at this point quite a number of people are very active on the digital euro. The decision, if we would decide on going to a realization phase, part of that decision is to indicate how long it will take, but our president has put the ambition and has said a couple of times that she would like to have it done in 3 years after that decision.
Okay.
So let's see.
I think there's one more question right there on the left-hand side.
Jesse McWaters, MasterCard. I have a question about international coordination in stablecoin regulation. Over the past 18 months or so, we've seen a significant acceleration of national efforts to bring stablecoins into the regulated perimeter. I think significant and important effort, given that that helps foster consumer protection and I think more effectively lend the credibility of fiat money to these assets. But I've been a little bit surprised to see that there's been relatively little consideration of the cross-border dimension in that work. Foreign holdings of stablecoins often aren't entirely clearly treated under draft and emerging regulations. There's been little discussion of how global stablecoin systems would be effectively ring-fenced or how the failure of significant assets would be resolved. And so I suppose curious, given that cross-border is potentially one of the key use cases for stablecoins, what's the right venue for collaboration on this? Where do we see the most significant risks? And when can we expect to get more detailed guidance around the appropriate treatment of these things in cross-border use cases?
Candice, is that something you'd like to answer?
Well, I share your concern about the lack of coordination across, we engage in the United States, we've engaged in other countries, but I haven't seen a lot of coordination on it. I think that from my perspective, the US dollar stablecoins are by far the strongest and the most prevalent. And so if the United States takes the lead on regulating, I think that others will follow. And there has been a lot of activity in the United States. I'm not particularly optimistic for this anything happening this year because of elections coming up, but the amount of bipartisan focus and attention and actual compromise in Washington, D.C., which is fairly rare and is encouraging. So all I can say is that I'm hopeful that we will, in the medium term, get to some very clear, robust regulation in the United States for the U.S. dollar-denominated stablecoins, and that will hopefully carry over and for other nations.
Well, thank you very much. Our time is up, unfortunately. Thank you very much for your insights on all these various issues.
Thank you.